Have you ever been frustrated dealing with a broker when you're trying to buy a property? You're not alone. Dealing with the long wait that often comes with closing a deal with a lender is stressful. The wait can be days or even months, depending on the property you wish to buy. Thankfully, there are alternatives available nowadays to quickly close a mortgage for a faster transaction. But how do these mortgages work? Let's take a look. Private lending institutions. Quick close mortgages are possible because of private lending institutions. These lenders allow for fast processing of loans and mortgages. Banks and other established lenders are not amenable to quick processing because they have their own credit checking and backroom processes for approving loans. Private institutions, on the other hand, are more lenient when it comes to lending and are able to process a mortgage application in a more efficient manner. While perhaps it is more risky to do that, they are able to process transactions quicker and charge a slight premium. Loan approval. Unlike banks, private lending usually has one or two persons approving a loan. Banks require a bunch of different signatures and checks to go through before they approve your loan. The less people looking at your application means less waiting time so you can own your dream home faster. Property appraisal. To close a mortgage quickly, certain private lenders might not require a property appraisal. Banks, on the other hand, would normally schedule their own personnel to check out the property you wish to buy and make their own appraisal, regardless of the specific property. It is simply a procedure. This can take extra time in order to properly schedule an appraisal with so many transactions a bank processes at the same time. Some private lenders might not require their own appraisal or appraisal at all. They are willing to work with the one you performed or could rely on neighborhood sales data. As long as you have done the appraisal with a legitimate company, it can be accepted by a private lender, which would speed up the process significantly. Not particular. Quick mortgage brokers deal with private lenders who are not particular about where you will use the money. Institutional lenders, however, are always concerned about where you will use the money because they are well known and have a reputation to protect. Private institutions may be concerned about this, but not as much as banks and similar lending bodies. They won't request that you submit a business plan or proposal for the business that you plan to put up in the property that you want to buy. But for institutional lenders, you may need to convince them that your venture will pay off before they lend you anything. This causes delay in approval of your loan. Are you feeling a bit more comfortable with quick close mortgages? We hope so. And if you'd like to learn more, we'd be glad to help. Visit our website today. And if you like this video, be sure to like, comment, and subscribe.